Lance Bryce with Thrive Mortgage. Today is Thursday, the 11th of May. I hope you're doing well. Well, we've seen interest rates remarkably flat over the last 30 days. So let's review where we are, and we'll look at some of the reports that have gotten us to where we are. Today we are sitting in the Mortgage News Daily Tracking Poll. Again, this is an index applied to current bond prices. It's really the most accurate day-to-day measure of interest rates. This is not a rate quote. I am actually quoting rates significantly better than what you're going to see reported here. So call me for specifics on that. So here we are today, 6.49% in the Mortgage News Daily Poll. Yesterday we were at 6.57, so that's a pretty good day over day improvement. We'll go into why in just a moment. A week ago Thursday, we were sitting right where we are today, 6.45%. And if you go back a month, sitting at 6.52. So when you look at that, you see that rates really haven't moved much. We haven't even seen a tremendous amount of daily movement like we normally see, not nearly as volatile as we have been over the last several months. And it's because the news that we have been receiving has been pretty much anticipated and has been broadly in line with expectations, with just a few little outliers here and there. We got some big news on inflation this week that could have moved the markets really pretty strongly in either direction, but it came in largely at expectations, if not a little bit better than expectations. We saw the consumer price index yesterday came in a little bit better than expectations. The market was expecting a 5.2% year over year number. We got a 4.9 headline number year over year, a little bit better than expected. And the same with the producer price index this morning. That's a more of a wholesale measure of inflation. It was a bit better than expectations, but not dramatically so. So that's the reason you see some improvement in interest rates today over yesterday, but frankly, not enough to write home about based on those reports being fairly close to what they were expected to be. We are seeing, however, some weakness in stocks due to renewed banking fears, and we've also gotten some additional information on jobless claims that are a bit higher than expected. In fact, you got to go back 19 months to find the last time that jobless claims were reported as high as they were this morning. So the jobless situation and more fears of future bank failures, this is tied to overextensions in the commercial real estate markets by a number of regional banks in particular. Jamie Dimon came out today and warned that he is anticipating more of these mid-sized bank failures as a result of their exposure to commercial real estate that is just getting hammered nationwide, but especially on the West Coast. So something to keep an eye on. It is something that is weighing on financials in particular, and you're seeing some of those dollars that would normally be going into equities finding their way into the bond market. That's another reason that we're seeing a little bit better pricing today in bonds. How is that going to shake out in the long term? Well, the good news is we are kind of seeing inflation moderate as we had predicted that it would. We will continue to see interest rates trend lower. I would like to see a steeper curve downward, obviously. Would love to be back in the fives, and we may get there. As we get deeper into the summer, we may well see rates that are testing those more attractive levels. You know, mid fives, high fives would be great if we could get there. But if we stay flat in this way, and if the market continues to move in a predictable way, it's going to take a little bit longer for us to see some of those realized gains in rates. In any event, I'm going to keep an eye on it, y'all. We're shaping up for a good summer. I am starting to really have my phone ring. I know a number of the folks that I visit with daily that get this video and respond to it and share their information with me. They're seeing a big uptick in activity as well. So we're shaping up nicely for a really, really strong summer. I will obviously keep everyone informed on this call. If anything major happens, we'll do a midweek interruption. But otherwise, stay safe, stay blessed, and we will talk to you next week.